Moving over to Jason with Cherry Creek Mortgage. You all know him. Let's give him a good welcome.
Morning. First of all, Robbie, thank you so much for inviting me. I know there's probably 5,000 mortgage lender choices out there that you could choose to do this section. And I was telling Robbie, I feel the pressure, right? It's the last day of HIIT training. It's the 5th day. It's like 20 degrees outside. I'm sure people are still in their beds right now. So congratulations to you for getting out of bed and choosing to make a difference in your career. So this morning, so we'll do 2 sessions today. The first one's going to be mortgages. The second one's going to be the #1 sales tool I've learned to really blow up my business over the past 10 years. And so we'll start off with this. A little bit about me and my journey. So I am from a little blue-collar town, home of $60,000 pickup trucks and double-wide trailers. I grew up in New Caney, Texas. If you guys won't hold it against me, I went to middle school and high school and elementary with Stott Laird and Jeremy Larkin, the icon team here at Keller Williams, and we do a lot of business together. And so I grew up in a small town, graduated from there, went to the Air Force Academy. And quite frankly, people ask, well, why did you go there? I got a football scholarship, but the #1 reason I went there with now as an adult, how I think about it is to get out of my small town, right? It was a very small town. A lot of people never grew up and got out of that town. I think me, Jeremy, and Scott might be the 3 people that got out. That was about it. So I got out of my comfort zone and went to the Air Force Academy in Colorado Springs, where it was colder there than it is here today. And I learned a lot that really helped me in the mortgage business in my career. It taught me to be accountable. #1, to be accountable. It taught me to juggle multiple jobs at one time. Sounds like a realtor a little bit. Juggle multiple jobs at one time, right? I went there for 2 years. I got a medical discharge from the Air Force Academy. I hurt my foot. And of all things, I went to Texas Christian University in Fort Worth and they fixed my foot, and I played football there for 3 years. I played free safety. And I'll tell you, at the Air Force Academy, I learned how to work with engineers, people that were way smarter than I was. I was there to play football, but there was these super brainiacs, like the best of the best, most studious type of kids. So I learned how to work with engineer types. You guys work with engineer types, right? So I work with people who are very analytical, very black and white, Excel spreadsheets all day long. Right. And then when I went to Texas Christian University, this guy that grew up in a double-wide, well, I didn't grow up in a double-wide trailer, but grew up in that environment with double-wide trailers and $60,000 pickup trucks where people's priorities were just different, right? They would have a brand new Nintendo, but they would, they live in a double-wide trailer, right? And you go throw a kid like that into Texas Christian University, where the school costs $60,000 per year. $60,000 to $80,000 per year. So that's where I tell people I learned how to work with rich people. All right. Because you think you have a lot of money until you show up and the kids at Texas Christian University are driving the 2022 Range Rover, right? Or they're driving the G-Wagon to college, right? And so I learned there, I was always intimidated by working with rich people because of my environment that I grew up in. And there I just learned that everyone puts their pants on one leg at a time. Right. And so fast forward there, I left, graduated from there. I had a chance to move back home, right, to Houston, Texas, where I'm from, and started my mortgage career about 20 years ago. I'll tell you, the first 10 years of my career, I did it all wrong. I didn't have the great training that you guys have here at Keller Williams. Literally back then, you would get your license, you would show up to work, and just had to figure it out at that point, right? And so I did it wrong for about 10 years, struggled. And then I met a coaching program called the Core Training about 10 years ago that literally changed my life in business. So fast forward from there, from 10 years to the second 10 years, my career has really taken off. Until this past year, our team helped about 275 families, just our personal production team helped 275 families for $106 million of volume. Wow. All right. And so in real estate terms, we count our volume off the loan amount. So people who buy $1 million houses that put half down, we get half of that volume, right? So I'm very honored to share that piece with you and share you some tactics in the mortgage space. I want to teach you a little bit about the mortgage industry today. What's going on in the mortgage industry, right? And some tactics, how to adapt and make it through this market, right? I see all types of different levels of agents here. Well, I'll start off with this. So that's a little about me. I love, in the mortgage business, I love the client consultation. Okay, so if you guys want to write that down right now, okay, I want you to start off with this. Number one, write down a mortgage question that you have. Right, just write down any mortgage question that you have. See, there's some newbies in the room. There's some very experienced people in the room. Right, so this should be a fun little exercise. So write down a mortgage question, Ron. All right, yours might be more higher level. It might be more like, hey, how do I overcome the rate objection? How do I overcome rates are going up? I need to wait till next year, right, to buy a house. It can be anything. Everyone write down a question.
Are you going to guess the question? Is that what you're going to do?
Yeah, I'll guess it. I'll get it wrong. Let's say that for it. Right. Yes. Hey, you coming by? Oh, good. You need to come by.
Was that Jessica?
Yes.
Sounds like it. There you go.
Everyone have a mortgage question written down?
I do.
Cool. We're not going to ask them right now. I want you to write it down.
Okay.
All right. Everyone have one written down though. We'll get those at the end. All right. So here we go. So the mortgage industry has changed quite a bit in the last 20 years since I've been in it. Okay. We started out in the business, rates were 7.5%. My dad used to tell me rates were around 18%. And then it got crazy busy like in the 80s when they dropped to 14 because everyone thought it was so cheap to get money. I grew up in a mortgage broker environment. All right. And then I transitioned to a mortgage banker. Here in the last 3 or 4 years, there's a new player in town, which is the internet lender that you guys have heard of, right? And so it's changed a lot. The business is moving, if you write this down, the business is moving faster than it's ever moved before, okay? Things are moving at light speed in the mortgage industry, just like the real estate industry with technology. You can literally get someone pre-approved in a day. You can upload their documents to be done with a loan pretty fast, all right? But before we dive into the different types of lenders, I want you to write down the top 3 jobs of a loan officer. I think that's important to learn. In fact, why don't you take 2 seconds to write down a couple of jobs you think a loan officer job is? Write it down.
I'll mute him.
Try to get into it. Write down a couple of jobs you think the loan officer, the job of a loan officer. Anybody got one?
Yeah.
Yes, sir.
I put down shop loan applications to different lenders
Okay, that's one.
or banks or whatever.
What's another one? Explain the terms to a client. That's a good one. To know all the programs. All right, cool. Y'all know how to sell all types of real estate? Another question? Or another job role? Qualified individuals. Anybody else have any good guesses? Communication. That's a big one, right?
I guess, locking the rate.
Locking the rate. That's one of our day-to-day jobs, right? Cool. We're talking about the top 3 overall.
Verifies all the information.
Verify all the, that's pretty important. Verify all the information is there. All right, cool. So I want you guys to write this down. Here are the top 3 jobs I feel there are loan officers in today's market. Okay. The third one may change depending on the market. Okay. Number 1, top job of a loan officer is to close your clients on time. Okay. I'm kind of surprised I didn't hear that one. It sounds pretty obvious, right? But to close them on time. It's a lot of stuff that goes with closing clients on time. And I want you to think about this when you're talking to different lenders out there, when you have a pre-approval letter come over from a lender, right? And I would tell you the number 1 thing to close a client on time with a loan officer is you need a loan officer or a mortgage professional that can lead the client, okay? If you're in a transaction with someone and they're not leading, right? Oh, well, yeah, we ordered the appraisal and it's going to be 3 weeks. And I don't know, I haven't heard back from them yet, right? Or if you hear from a loan officer, oh my gosh, thank you for the referral. I think we may have to move closing. We just don't have the documents yet. Like, we're a week out from closing and the client's been really slow getting the documents. Have you guys ever heard that? That's a loan officer's job to get the documents. All right. So close on time. I think the number one thing is a loan officer who can lead the client throughout the transaction. Okay.
Oh, what the fuck are you doing?
Number two. Okay. Number two, I heard that, to educate the clients and make them say, wow. Right? To educate the clients and make them say, wow. One of my favorite things in the mortgage industry is the actual consultation. So, so I threw a pretty big number out there, 275 families we helped last year. Out of the 275 families, I believe the way we structured the team, I believe that I probably did, realistically, Emily, what do you think? 260 of the 275? Definitely about 250. I mean, sometimes you go out of town and the team has to do a consultation once in a while, right? You got to love a loan officer has to love the consultation, right? A lot of loan officers in today's environment, because we have what's the new guy in town? What did I say earlier? Internet lender, right? Okay. So what do you think an internet lender does with a consultation? You think there is a consultation?
Just team application.
I just came back from Playa del Carmen. It was much warmer from here. We were at our sales awards trip. Okay. And Cherry Creek has a retail division, which is the loan officer who works with realtors and builders and database. And we have an internet division. And it was funny to watch the dynamic all week in Playa del Carmen, because you have these same company, but two different divisions, and night and day difference on how they react. Okay. And I can tell you, I made it a point to go hang out with the internet guys. To be like, well, tell me about your business. Tell me what you do. Tell me about this. And these are guys that close 300 loans a year. These are the guys that maybe if you're a lending tree or they found them online or something like that. Literally one of the top producers at our company in the internet division, I go, man, tell me about your day, right? I mean, dude, you close like 200 and something loans, right? 300 loans. Tell me about your day. He goes, oh, honestly, I usually get up in the morning. I go downstairs in my basement there from Colorado. I go play Call of Duty for about 2 hours in the morning, right? Then I get up and I go call leads. That's what I do. I call leads and I sit on estimates. I go, that's it. He goes, yeah. Then I collect the documents and turn in the processing. I call the next lead, right? Zero consultation. I'll tell you, that's our company has that division. A lot of companies have that division, okay? So just know when you're talking to an internet type lender, there's probably not a good consultation. So education is key, right? To make sure that they make a decision fast on the loan, right? If they're not fully educated, Ross, and they go out shopping and they don't know the difference between 5% down conventional versus a 3.5% down FHA, how quickly do you think the client's really going to make their decision when the house comes on the market? Right? They're not, right? There's an excuse to say, oh, well, I don't really know. If they're not really clear that the property tax rate in the Woodlands proper is this, right? And if they just venture over to Augusta Pines, it's this, or that little section next to Augusta Pines is like 3.5% tax rate, right? Or even Creekside's 2.7 and the Woodlands is as low as 2.2, right? Then they're less likely to do what? Either make the decision or even worse, go under contract and say, hey, this is too much. So education is key. All right. And then make them say, wow. That's all part of the second job of a loan officer is make them say, wow. Right. Let's be real clear. If you're going to work with realtor business and you want a sustainable business, like Gary Keller says, you have to make the client say, wow. Okay. And so if you have a mortgage company that you're partnering with in this environment, right, and the client's not coming back and saying, man, that was a great consultation. I at the very least know what I'm doing, right? Or, hey, they attended my closing. I got a closing gift. Wow, that was a pretty good experience. All things being said, right, you're less likely to get more referrals. That's what I put on there. Number 3, okay, the number 3 top job. Help you win the offer. Okay, that's why I said I think that could totally change. Because we've been in environments, right, where there's too many listings and they'll take whatever deal they'll just give me an offer. I don't care if it's from internet lender or whoever, right? Just give me an offer. But that's not the environment that we're in. I was talking to Robbie earlier, and I think, and forgive me because I've been out of the country for a week, but I think about a week ago, I read the report for last month's market report was, I think 2 years ago, kind of a normal market. There were 550 listings in the Woodlands this time last year. Anybody want to guess how many listings in the Greater Woodlands are going to have right now? No,
150.
not even close.
Like,
150. 150. Right? 150 listings. Right? I heard the big sigh. So we're going to talk later. We're going to talk in the second session on not how to let your environment dictate your outcome. Because I heard the big sigh, right? The environmental listings doesn't dictate how many sales we're going to have this year. I promise you. Okay. But make no mistake. The top 3 jobs are what? Say them out loud. Number 2. Cool. Number 3.
help you win the offer.
Help you win the offer. All right. And so I'll talk to you about how we help you win the offer later on. Okay. So those are top 3 jobs of a loan officer. Now there's 4 different types of lenders. I kind of got into that. Okay. Robbie wanted me to go over this with you guys. There's 4 different types of lenders as you're out there showing clients you need to know about. Number 1's a mortgage broker. Okay. Mortgage broker, old school mortgage broker. That's what I used to be. I moved back down from, actually I started as a mortgage broker in Fort Worth. Then I moved down to Houston to open a mortgage brokers down the Heights. And that was, someone said the job was to shop all the rates and shop all that deal. That's a mortgage broker's claim to fame in 2006. My selling proposition was this: hey, I'm a mortgage broker. I have access to 110 different lenders. I will shop you and find you the best rate. Right? That was what a mortgage broker would say. Okay. Now this thing has come across called Dodd-Frank, and they made us change all of our commissions and everything. So all the commissions and all the rates are pretty dang close. I would say maybe if you talk to a mortgage broker, maybe they're an 1/8 of a point better sometimes. Maybe they're 1/8 of a point higher, but it all has to be pretty similar in these markets. But a mortgage broker, just so you'll know, a mortgage broker is someone who has no credit lines. Okay. All right. And they will go around and they'll have different banks. And they will shop your loan for you, okay? So they can shop it around. There are way less wholesalers than there used to be. They are starting to come back, just to be honest with you. The wholesalers are starting to finally come back since 2008, okay? But I will tell you that if you're a mortgage broker, this still exists. You do not have any credit lines. So you're at the mercy of the wholesaler you send it to, okay? Cherry Creek actually has a wholesale division as well too. So mortgage brokers will send Cherry Creek loans. And we'll underwrite it, close it, and fund it because we have a credit line, right? And then we'll pay them a little bit, and then we'll keep the loan, and we'll either keep it or we'll self-pay them back. Okay, that is a mortgage broker, yes.
And novice question, what do you mean they don't have credit lines, meaning like they have to sell the loan?
No, they can't even fund the loan. So they don't have the money. They're not giving your client the money. They're talking to U.S. Navy Bank over here, right? And saying, hey, I got this client, what's your rate? What are you gonna pay me? Okay, cool. I'll send you the loan if you're gonna pay me that. That's what they're saying. Okay, that's what. And that board broker may have another wholesaler here, another wholesaler here.
They're a dealer. They don't serve.
Right. Correct.
It's like an insurance broker.
So what's a wholesaler?
Similar to that. Wholesaler is the person who buys the loans. It's like Cherry Creek can buy the loan. Right? The wholesaler is buying the loans from the broker. And a lot of banks do that. Yes.
In my experience working with a couple of them, they don't always know like where the loan is because they have fucked up the middleman. And so I have had some of my loans that had a closed end now. One of them was a mortgage broker. So he's like, well, they're not right here sitting with me, or they're.
So that's 100% true. If you're talking to a mortgage broker, you're not going to have an underwriter in their office ever. All right. You're not going to have a closer in their office. They won't have any operations there. Okay. Which isn't, I used to be a mortgage broker. So if they have a really good wholesaler who's buying their loan, your client's loan, you don't really technically need that if you have a good loan officer.
Exactly.
Here's another rule I want you to write down. Okay, I'm now getting going. Now, this is gonna be fun. Number one rule with mortgage lending: it's always the whose fault.
Realtor's fault, my fault.
What'd you say? Nope. You sound like a loan officer.
The client.
Did you used to be in the mortgage business?
Well, I
But that's there.
Okay. It's always the loan officer's fault. Always. It ticks me off when a loan officer, I get a loan from a client and they transfer it over. We got one last month. Lady, she's from Mexico. She bought this house. She had a condo in Miami to sell, and she gets into it, and the loan doesn't close on time. 2 days before, I get a phone call from a realtor saying, hey, can you look at this deal? Can you save it? We wound up saving it, but I was like, well, did you know it was contingent? Like I can do it as long as they sell the house, right? And then the loan officers said what? Well, the underwriter came back with this, okay? Right? It's always the loan officer's fault. The underwriter, all they do is review the loan. They're not making up the guidelines. Someone said our job was to know the guidelines, right? Yes, it's our job to know the guidelines. So the other thing that really ticks me off as a loan officer, so I heard earlier, our job is to know all the loan programs. I don't know all the loan programs, right? I don't. I'm not very good at down payment systems. I'll tell you right now, you have down payment systems, I may not be a good fit for you, okay? I'm really good at 3% down, 5% down, 20% down, good at move up. I'm good at a lot of other things, but you have to know your niches. Loan officers will do this. You say, "How can I deal for you?" Down payment assistance. They will look you straight in the face a lot of times and say, "Oh yeah, I'll do that deal. I've done a lot of T-Shack." And they may have never even done a T-Shack or maybe two. I think that's a disservice to the realtor and the client to know what you're good at and what you're not good at, okay? And so not every loan officer knows all the programs, nor do every bank have every program, right? For example, if I have a client that I can't get done, if it's just outside the box, I have a portfolio lender. So that's the second type of bank. We'll write that down, portfolio lender, okay? Portfolio lenders, a lot of times y'all have never heard of who they are. Like I have a portfolio lender. I work with a guy at Texas First Bank. You'll probably never heard of Texas First Bank. There's one in the Woodlands, but you don't know who the guy is. There's one guy at Texas First Bank. He doesn't even office in the Woodlands. It's a good old boy bank, and they just look at it and say, "Yep, I'll do that deal. Looks good to me. They got lots of money. I'll do it." Right? So I can do those deals for you guys, right? And I'll place the loan with the portfolio bank. I don't get paid much on it, but at least I'm servicing the client. So there are portfolio banks. Those are good old boy banks that look at the deal and say, "Well, this doesn't really meet guidelines. Jason, can you get it refinanced in 2 years?" All right, I'll give them a loan. Okay. Those guys typically want 20% down. All right. They want 20% down. It's a rate that's usually higher. It just kind of bridges the gap between, hey, I don't really qualify right now, but I'm probably going to qualify in a year or two based on what Jason says. Okay. And we do probably 24 of those. So about 2 a month. I'll do. They're usually high net worth individuals, right? They're just outside the box. Maybe they just changed from, if you change companies, like if you're self-employed and you're an LLC and you change to an S Corp, like last year, you can't do the loan. You have to send it to a portfolio lender, okay? And so they would do loans like that, okay? That's portfolio lender. The next one, I want you to think of it this way: a broker, and then there's correspondent, okay? Correspondent mortgage banker, okay? That's what Cherry Creek is, all right? So that means you have, so the broker doesn't have their money. They may have more flexibility because they can go to different lenders, right? They don't own the underwriters. So the underwriters, not only do they not sit in their office, they don't employ the underwriter. It's not on their payroll, right? If the wholesaler decides they don't want to do loans next week, which sometimes they do, then they have to switch your loans, right? So there's really no control, all right? The only thing a broker really has to stand on is, "Oh, I found this wholesaler that's getting really good rates right now." That's it, okay? And just like in real estate, if you build your business on, "I got the lowest rates," right? Imagine you building your business as, "Hey, I'll sell your house for 3.5%. Would that be a sustainable business? No, because you're not making enough profit to pay yourself, right? Then there's correspondent private bankers, okay? That's what Cherry Creek is. Cornerstone Mortgage is here in the Woodlands. They're a privately held mortgage bank. They're a good company. Companies like that, Legacy Mutual Mortgage, they're inside the loop. These are correspondent lender. SWBC's here is in the Woodlands. They're a correspondent lender, okay? What that means is you have your own credit line. So you're funding your own loans. So you're taking responsibility. If you make a mistake on that loan and you fund it, you buy it back. So most of these companies have a credit line. Like we have a credit line with a bank down in Houston for like $100 million, right? All we're really doing is we're doing the loans really fast. We employ the underwriters. So I have in my office, I have 2 underwriters in my office. I'll have 3 by March, all right? And I have 2 closers. So all the employees work for the correspondent lender to get the loan done, okay? what we do is we go in, we do all the work on the loan. We can move pretty fast because our own employees, like if I need to walk down the hall and go, hey, dude, I need this done. Can you get it done for me today? Like this is a really VIP realtor. Then I can technically do that. Okay? Because they're your employees. They work for you, right?
But so they're the same, the correspondent mortgage and the correspondent private mortgage are the same?
Same thing. Yeah,
Okay. I
yeah,
thought
same
it was
thing.
two
Don't
different-
confuse that. Don't
Okay.
confuse that. It's a private mortgage company. That's what they're
Okay.
also called. Okay. They fund the loans. They do all the work. They have to deal with all the compliance. Like they're basically, they're a mortgage banker without being a bank. Okay. So a mortgage company only does mortgages. Okay. They fund the loan. They take all the responsibility if the loan's done wrong. We buy it back and it sits on our credit line. If the credit line gets too full, you go out of business. Okay. And so being a correspondent banker was pretty hard at the first part of COVID. Do you want to know why? Because all the banks that gave the credit lines all freaked out and said, oh, wait, do you remember when the jumbo loans went away for a while? That's what happened. That's what happened is it wasn't the jumbo loans went away. It was that people giving the money to the private mortgage companies said, well, wait a minute, this is something weird going on with COVID. We're going to decrease the credit lines on these. We'll only let you fund a couple a month until we figure out what's going on. That's what went on. And then the credit lines came back. And it was actually the fight of the fittest. It was whoever had the strongest privately held mortgage company went to their credit line and said, hey, dude, like we've been working together for 25 years. It's our reputation. We're not screw up the deal. And then they got the jumbo loans back faster. That's what happened. So the cream what? Rose to the top, right at that point.
How long did that last?
8 months. 8 months. That's when you heard everyone.
I had to be one.
That's when you heard people doing first and second liens a lot. So we said, all right, get rid of the jumbos. We'll just do a first lien and a big second lien. So we're just adapting to the market. Right. Ours came back pretty fast. I think ours were gone for about 3 months. So we got back fast, pretty quick. Right. But our CEO's, he's been around since '88. So he's got a really good reputation. They do pretty clean loans. And a mortgage banker, okay, can still shop. Okay. So we can sell our loans to investors, just like a broker, right? We can keep them and service them, right? Or we can sell them. And so a higher level of a correspondent banker can sell straight to Fannie Mae. So it's actually two separate types of correspondent lender. People don't know that. There's ones who just sell to investors and they have a credit line. And there's ones that I can sell straight to Fannie Mae. Those are the best ones because Fannie Mae and Freddie Mac are the most aggressive. Like their guidelines are like pretty flexible, right? And if Fannie Mae and Freddie Mac said they'll buy it, then you can sell it to them. Okay. Some of the privately held mortgage bankers got in trouble with FHA and stuff like that because they couldn't sell straight. The investors that they were selling to were saying, no, we don't want these loans. But Ginnie Mae was saying, hey, we'll still buy them. So then if you didn't have that outlet, then you're in trouble. Okay, so there's two different levels of private mortgage companies. All right.
Fannie Mae, Freddie Mac, can you give?
Ginnie Mae too?
Ginnie Mae's FHA.
FHA, okay.
Ginnie Mae is FHA. They buy VA loans and they buy FHA. Okay. We actually had during the COVID, we had one, I'm not gonna mention any names. We had one Houston mortgage company, pretty big. If I said their name, you're like, oh, I've heard of them. Approach us and say, hey, we can't sell straight to Ginnie Mae if we don't have that designation. Like none of the realtors know it, right? Most of the mortgage industry didn't know it. Let's say, hey, we don't have the designation and we're being cut off at the knees. We can't do loans. Can we work a deal with you guys we'll originate the loans and we'll sell them through you to Ginnie Mae? And we said, no, we're not doing it. Sorry. It's too much risk. We're like, your loan officer originates the loan. So there's two different types. Okay. Then you have the big banks. Okay. The big banks, and by the way, a correspondent lender, we sell a lot to Chase. We sell a lot to Wells Fargo. Okay. Then we sell to PenFed. We sell a lot to maybe banks you've heard of, but we can move way faster because we're not worried about all their overlays, right? We'll sell it to them if they'll buy it. Not we'll sell it to Fannie Mae. Okay. Don't get that confused with walking into Wells Fargo. Okay. Wells Fargo would say, hey, Cherry Creek, can we buy $50 million of your loans this month? Because we just had a bunch of refinances walk out the door and you replace our portfolio. And so they'll sell it to us. They'll buy our loans and we'll get better rates because they want to buy 50 million at a time. Does that make sense? right? So in a way, Wells Fargo is a wholesaler too. So they can do all kinds of things, okay? But the big banks, let's talk about those. Chase, now I'm talking about if you walk in the door, right? If you go to this Wells Fargo or Bank of America or Chase or whoever and walk in the door and say, hey, I'm a client, I need a mortgage loan. I would probably put, I don't know where to put USA yet. I don't know if I'm gonna put them in the internet category at this point or the big bank category. I'll tell you why. I'm a veteran, so I can say those things. But let's stick with Wells Fargo, Chase, and all them, okay? When I first got, pardon?
Third type.
Third type of bank. No, fourth, I think. No, we're moving to big bank. Okay, so big banks. All right, big banks. Wells Fargo, Chase, all those type of guys, right? Now they do banking, they do mortgages, but then they do car loan, they do everything, right? So that's a different type of bank. But they have their hands in everything. They'll do car loans, boat loans, they'll do life insurance, they'll do deposits, they'll do all those type of things. Okay, they'll even buy our loans from us. All right. And they're doing that. They mainly do loans because they feel if they can get the mortgage, they're only doing the loan, in my opinion, to get the mortgage so they can get all the other banking. Right? They want to get all the other banking because if they, my friend has worked at Bank of America for 23 years. She's like, yeah, Jay, she's like, if I can get their mortgage, then we can get their car loan, we can get their credit cards, we can make interest 8 different ways on one client. Right? So it's really there just to service the bank and get a credit line into the bank. Yes.
Credit unions fall into this category, the banks, or just
credit unions. I would put them as a different animal. I'd probably different type. I'd probably put them differently. Because credit unions up north are really good, down here not so much. So a credit union is like a small bank, I guess is the best way to put it. Okay, they're not. I wouldn't put them in Wells Fargo category. But they do deposits, they do car loans, they do boat loans, so very similar.
they do mortgages too?
I will tell you that most credit unions are usually more conservative than the big banks even. So yes, I would put them in the banking category.
The smaller.
Small bank, big bank, basically, is what I would do. Correct. Like Texas, Dow, Federal Credit Union, those type of deals. Now, what they typically do, from what I see, is they don't do a lot of stuff outside the box, and then they have one niche program. That's really sexy that you might, oh, that's really sexy, let me go over there. But then besides that, they're super conservative. Okay. Most of the time, like the big bank, the credit union has one guy servicing the entire city or something. It's very understaffed typically. Okay.
When Navy Federal is a credit union, but they also, I guess.
I'm going to put them in a whole different category. Okay? I don't want to confuse you,
Okay.
but I will go to the last category, which is internet lending. And yes, I'm a veteran. Okay. So I was in the Air Force. I feel like I can say this because they're acting like an internet lender. Okay. They're not. So an internet lender is it can be any of these banks. Does that make sense? It can be a broker. It can be a Cherry Creek. I told you Cherry Creek has a division called Blue Spot, which is an internet division. Okay. Network Funding here in Houston has a mortgage company, has a mortgage division called Triumph Lending. Have you heard of them? Well, that's Network Funding, not one that tell people, oh, we're in the internet game. Okay, they just name it something different. Internet lenders, like I said, I gave you the example of one of the top producers at Cherry Creek does 300 loans. You know, literally we'll go play video games in the morning from 7 to 9. He'll go call on because no one's answering the phone that early. He literally goes in his basement and goes, dude, I play Call of Duty from 7 to 9. Then I go call leads from 9 to 12, take applications, and then take lunch. Then I go to 1 o'clock. I put the files together and turn them in. Then I forget about it. That's it. Okay. You usually have the lowest rates. You can write that down. Internet lenders usually have the lowest rates. That's why your clients are like, oh, coming to you with these internet lending deals, right? Right. Lease service. Correct. Correct. I'll tell you, because I know Gary talks about all the time with some of these internet real estate companies. Think of them as an offer pad. Think of something like that. There's a mortgage company called Better Mortgage. I mean, I compete with them all the time. They're in New York. They got stupid low rates, like stupid low rates. Well, they just had a deal come out, said they lost like $50 million last month.
And we're talking about the moron.
Better.com is what it's called. No, that mortgage company, it's an internet company, but they lost $50 million last month. Okay. So that's not a sustainable business either, right? And I think the dangerous thing with the internet lending really is, if they ever figure it out, then I'm in trouble, right? It's kind of like offer pad and those guys. If they ever really figure it out, they're like, oh crap, all right. Well, but I don't think you can replace a good consultation. at a face-to-face meeting, right? That's hard to replace, right? The local expertise, right? I always find it funny that I'm competing with an internet lender and they're out of New York and they leave half the stuff off the estimate. So what I usually do? I usually like, here's my estimate. Yes, it's higher because I have all the HOA information in here. I have correct insurance. I have correct taxes in here. Oh, by the way, they're out of California. They're an internet lender. They have no clue what goes on in Texas. So I'm spending half my time just saying, dude, if you want to cross your fingers and go with this person who doesn't even know what the tax rates are in New Orleans, right? Go for it. And by the way, they use an appraisal management company, right? Go for it, right? But you'll probably get ready to call your realtor a week before closing, and have them move your close date in a tight market, right? And so I think maybe if I was refinancing and I had 90 days, I might use the internet lender myself, just because it's really cheap. I haven't really eats a lot. Okay, maybe. Everyone understand the different types of lenders? I think that's important for you all to know as you're going out there, because you'll know how to refer whoever you want to work with. Hey, that's great, right? That's great. You're working with them and you know what you're dealing with. Because at the end of the day, I feel it's the loan officer's job to get you the money on time. It's also y'all's job to help manage the logistics and everything too. And if you know they're with a certain lender that you're probably going to have issues with, or there's a highly likely chance you might get a phone call 2 weeks before closing, at least get a second opinion and make them apply at both places. That way, if you get the phone call in the last 2 weeks, the deal that I saved last month, we had to move it. I said, I'm closing in 25 days, right? Had I had her application up front and had her documents, and she said, well, I'm just going to go with this other lender. They got a little bit lower rate. Then if they would have called, I could have probably closed it in 2 weeks, right? I could have said, cool, I have all this stuff. Let's rock and roll. Let's go. Order the appraisal. Let's go. Or transfer the appraisal. Okay, cool. Any questions on the different types of lenders? Cool. All right. So I'm going to jump into this. Okay. These are my like 7 or 8 things to know when working in real estate in today's environment. Just little tactics to know as you're out showing clients. Number 1, a buyer can typically qualify for 3 times the amount of what they make. So if they happen to tell you, yeah, well, I just got a new job, I make $100,000 a year, right? You probably qualify for a $300,000 house. That's just off the top of your head. If you want to be really rough about it, okay, with normal debt, okay, 2 decent sized car payments, a couple of credit cards, it's about 3 times of what they make.
Is this gross or because I get that question?
Don't overcomplicate it.
I know.
Don't overcomplicate it. Hey, how much do you make? Don't you have to tell me. We're role playing.
Oh, okay.
Mr. Smith, how much you got that new job, man? How much does it make? Well, they ask you, how much do you think I qualify for? I'm a realtor. How am I supposed to know that? Right? Here's why you need to know it. Because if they're looking at a $600,000 house and they just told you they got a new job making $125,000, they probably don't qualify for the $600,000 house. Okay. Right. So know that. Okay. Debt to income ratio. Okay. So 3 times the amount, what they typically qualify for. Debt to income ratio is simply this. Okay. It's sometimes called as a back-end ratio, right? The way we calculate ratios is this: how much money do you make? Okay. Divided by your reoccurring debts, which is your mortgage, if you have mortgages, car loans, and credit cards, and installment loans. Installment loans are typically car loans, student loans, that type of stuff. Okay. Just divide the 2. That's
So
it.
student loan payments, you mean, right? Monthly
Correct.
payment?
Monthly payment, monthly recurring debt. Yes, sir. Okay. I think Robbie wanted me to cover this. What do we use for student loan payments? If you want to be conservative, use 1% of their balance. Okay. So if they have $50,000 in student loan debt, just take 1% of that. That's going to be the monthly payment. Okay. I could get by with 0.5% if I run it through Freddie Mac, but that's something loan officers. So realtors just use 1%. Okay. I'll flip it to Freddie Mac if I need to and get a lot lower student loan payments with Freddie Mac. Cool. Red flag. Everyone write this red flag down. Okay. Recent change in employment equals red flag. Okay. I just got a new job. That's actually a red flag. Okay. Here's why it's a red flag. Okay. with someone who's a employee of a company, if they have variable income, cool, you got a new job, awesome. Hey, so you must have got a raise. Yeah, I got a raise. Cool. Cool. Do you get like bonuses and overtime as well too, or some sort of profit sharing? They say that new job, red flag, because you have to have a history of variable income is where loan officers usually make the mistakes.
So what, but if it's in the same industry?
Same industry, same line of work, but here's the kicker. The clients will say this, they say this to the loan officer. Oh yeah, man, I was making 100, now I'm making 200. I'm making 200. You're like, okay, 200 times 3, that's $600,000, right? But their salary was still 100. Now they're just getting a quarterly bonus on profit sharing, and now they're getting an annual bonus too on the percentage of all the sales of the company. Can't use it. So that's why I say it's just, this is a simple thing to know. Red flag. Let's get with the loan officer. Let's take a second look at it.
But if it's same type of compensation.
Yeah, that's usually what I ask. Okay, cool. Your base salary, and what we usually do is just qualify them on the base. If we can get away with base salary, we just don't worry about the variable.
So as long as it's same industry and same place.
And the price of the home is more like.
Not always the same pay structure. Because if they're moving from, this is what we're getting the weeds. They're moving from El Paso to Houston. Oh, cool. I got a raise. Same type of pay structure, and they're half of it's commission. Different company. I don't have history of commission in Houston, Texas, so I don't know what they're going to make, so I can't use it. So just think about this. When you're out talking to clients, change of employment, red flag. I'm not saying don't show them. I'm saying that's urgency to get them to a lender that's going to look at it, right?
So, but how recent of change of employment? 3 months, 2 years?
6 months.
6 months.
Okay, so excuse me for a second. So the commission you're talking about, because they come from a different area, but if they're in the same, if they're in Houston and they move from one company to another doing the same thing, they're still commissioned, you do take that into account, right? And I understand that.
As a realtor, what I'm saying, as a realtor,
yeah.
Cool, awesome, congrats on the new job. Hey, did you know when you move company to company and there's a lot of commissions involved, variable income, it's a good reason to make sure you're sitting down with the loan officer and talking to them.
Okay.
So we're just talking about the mortgage industry, and that's a good key for you to be like, all right, let me get them with my lender. Let me go show them properties. You let me know, dude, right?
He's not saying they're disqualified or
Right,
they're
right.
not.
No, I'm not.
they're
These are red flags to get them to a lender,
Yeah.
right?
Yeah.
That way you can keep selling, right? Okay. What we're trying to keep from happening is going down the road, right, for 45 days and have a bomb happening at the end. These are just easy tactics, all right? Newly self-employed, huge red flag. Cool. I was working for Exxon. Now I became a consultant. I'm straight commission. Huge red flag. Get them to a lender. Okay. Moving from out of state equals red flag. You may say, I already hear you guys' brain. Well, what if it's the same job? What if it's a transfer? That type of stuff, right? Okay. When a client moves from out of state right now, a lot of them are moving, and a lot of them are having you show them houses, and they don't even know that they can work remotely here. They'll tell you, "Oh yeah, I've been working remote. This should be fine." My company doesn't care. Now I'm getting clients now that are moving here, and I've been working remote. It should be fine. It's like, cool, go talk to your employer. I need you to talk to them in the next 24 hours because your realtor wants to show you houses on Saturday. Oh, well, I don't know. Well, I haven't talked to him yet. Okay, so is this customary in the company? Well, yeah, we're going to talk about it later. We don't really want to talk about it now. I've had people from, like, Nordstrom's a huge company. One of the executives from Nordstrom, realtor was out showing them houses, $600,000 houses here in Houston. They were from Seattle. She got halfway through it, and they're like, no, I'm not doing it. If I do it for you, then I have to do it for all of the Nordstrom employees. So what's happening is they're changing their tunes, right? So I'm just saying, they move from out of state, just a red flag. Hey, get them to the lender so they can have these conversations. Okay. I've actually had them tell me, oh yeah, I can get it. It's called a remote lender. I can work remotely from Texas and still make the same amount of money. That's what it's called. It's called a remote lender.
And is that?
And you
less
have to
flag
have
for
it.
you? Okay.
No, you just have to have it.
Okay.
So, hey, half the time, they're no big deal. Probably 80% of the time, it's no big deal, right? But 20,
Something that all lenders are asking, or? are you
All lenders.
finding
it's a requirement from Fannie Mae and Freddie Mac.
So they have to ask.
Correct. Correct.
Mhm.
Yes, ma'am.
That's so
Good
good
question.
to, like, your-
So you have Freddie Mac and
Remote
Fannie
lender.
Mae sitting up here, and these are the guidelines, and they filter down. And so the big banks take these guidelines and they add their overlays on it. That's why the big banks are more risky. They're not risky. They're more conservative because because they're a bank, they're doing the mortgages to get the credit lines, right? So they put extra rules on top of them than a private mortgage company might, because I didn't go around them. Does that make sense? Cool. All right. Cool. So those are a couple of red flags with income. Don't ever, 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 ever write this down. 1 second. Don't ever, ever, ever quote interest rates. I hear it even from like really experienced agents, right? I hear it all the time. Sometimes they even call me and say, well, Jason, why did you rate this? I was just at a closing. I'm like, what? Like, there are about 25 different things that go on and calculate an interest rate. Okay. Right. There's a lot of different things going on with interest rate. Don't ever quote an interest rate, and don't ever judge a book by its cover. Okay. Just because a guy walks in with a 3-piece suit, $1,000 shoes, doesn't mean their credit's good. Okay. Yes.
The rates, the pre-approval letters, do you put TBD on your pre-approval letters, or like to be determined, or do you put a rate when you?
No, put a rate. Why not?
There's some that don't, and
My realtors usually say I need a rate.
like third party, you can't put TBD.
The smart realtors usually cut the listing agents say I need a rate on it, like the TBD, you get out of the contract. Like I need to know what rate they qualify up to. Real fast for pre-approval letters. So here's what you need to know. This is up to date stuff. Okay. Wells Fargo, Chase. Wells Fargo and Chase for sure, but most of them do this. I think USA does it as well too. If you actually read the letter, have you actually read these letters? Yeah, what does the Chase one actually say? What does Wells Fargo say? Have you read the email that they send to the client with the letter attached? So this is fun.
It's not that they haven't looked at all the assets, like they haven't looked at anything basically that.
It's worse than that.
Conversation.
It's worse than that.
Oh.
So I intercepted an email from Wells, like the client just sent me the pre-approval letter. Hey, send me a pre-approval letter. So he forwarded me the email from Wells Fargo. So it's a template letter. So you can go on Wells Fargo, any of the internet lenders, you can do this, by the way. Okay. You can apply over a weekend, plug your stuff in, and they Quicken does it. They automatically shoot you a letter without talking to the client. It automatically goes out. That's how the big banks do weekend coverage. Instead of talking to one else, we'll just send you the letter. In the email, it literally says, congratulations, you're pre-qualified for a mortgage based on what you put into our system. Take this letter and hand it to your realtor and tell them you're pre-qualified. So they're coaching them what to do. And then you read down the letter, and the letter literally says, you're pre-qualified based on the information you submitted, blah, 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 up to this amount. Once you find a house, we will finish your application. Literally says that in the Chase note. We'll finish your application. Okay. So just be careful with all that. And because you're going to have clients say, well, I got a letter. It's all good. I'm fine. They said I can get a loan. I'm done. That's literally what they say. Okay.
There's a big difference in pre-qualified.
Correct. Give me that in 1 second. But don't overquote rates because you don't know people's situation. I felt so bad that some people like, literally, this is what my conversation has to be when I go quote rates. Oh, I heard you could get right now 3.125. Their other client got it. I'm like, yeah, sir, that's great. But did you tell your realtor you had a 652? That's literally the conversation we have to have when we start quoting rates. Okay. Some people, when you're hearing the rate at the title company, they've paid $3,000 to buy down the rate. Okay. So there's an interest rate with no points and no origination. And there's interest rates with points and origination. There's two different things. And they're drastically different. I had a client that I told him, I would not do this. I don't even feel right doing it. She goes, oh, I want to buy down. This is my forever home. I will spend $6,000 buying on this rate. I go, you know, you have to stay in it 10 years until you make your money back. So that's the danger of listening to rates at title companies and hearing clients, because you don't know. Hey, well, I have an 800 credit score. I have an 800 credit score. Then in your mind, you're thinking, well, that's credit scores. We have to see an exact loan amount. Well, his style is to buy down the rate. His style is to premium hikes the rate so he gets money back. Right? Because the rate has to do with timing. Write that down. Interest rates have to do with, for your client, when we pick out rates for your clients, has to do how long are they going to be in the house? Okay. And how much extra money do they have to burn? They have extra money to burn, then they can buy down the rate. They have no money to burn. If your client's shopping with 5% down, probably aren't buying down the rate.
Excuse me, say again, the interest rate has to be tied?
Timing.
Oh, timing.
Whether a client buys down the rate or not has to do with timing.
When you say money to burn, you mean money to put down?
Yeah.
Or money to
points-
buy the points?
Points, you're paying extra money to lower the rate one time. Okay. All right. Here's another tactic for all you. Get your insurance quotes and the appraisals ordered within the option period every single time. Okay. I see a lot of closings missed because insurance isn't selected by the client. Right? It's really the loan officer's job to make sure the insurance is done, but if the realtor, if you want to help out and say, hey, get your insurance done within the option period, it helps out a lot. Okay. Cool. In the appraisal, you want to order the appraisal as soon as you can because they're taking 2 weeks. Right? You wait on it. If you have a really good lender that does a lot of business, you may be able to order it. And if the deal falls apart in inspections, have them policy appraisal, right? But I would start saying this is the cost of doing business. Inspections and appraisals. Okay. The number one thing to do for your clients in this market is to make them apply upfront and send in all their docs. I don't care who the lender is. Make sure they both apply and they send them every single piece of paper that they ask for. Okay. Until they send in the paper that they ask for, you don't have it. You're driving around your car hoping that they close. Okay. And if you hear the lender ever call you and say, man, I've asked for these documents 2 or 3 times, like that should be serious red flags. You should thank the lender, say, hey, thanks for letting me know early. Right. Okay. The problem is most lenders won't talk to the realtor about it and they'll just deal with it because they want to be too nice. Does that make sense? But that is something that's going to help you miss your close date. Okay. And make sure and ask the lenders, whoever they're working with, it doesn't matter who it is. Hey, tell me your style. Do you do a full consultation with a client? Yeah, I do. But what does that look like? What does your full consultation look like? Right. And so ours, what we do, because I want to get face-to-face with my clients, this is what we'll talk about the greatness tracker. I want to get face-to-face with my clients, right? I'll get more referrals. I'll make sure I close on time. I give better service, right? To ask the lender, it's okay to ask, say, hey man, did you double check the docs? Cool. Hey, what is your company? Do you do a professional mortgage consultation? And the internet guys are like, yeah, I sent them estimates, right? Well, what does your consultation look like? And they should be able to tell you, right? So like ours, we don't do phone consultations anymore. Why? Because you can't really communicate over phone. Like you're talking about $1 million purchase or a $500,000 purchase, and you're going to talk about interest rates. Hey, 3.125, 3.75, 3.25, 3.5, they all sound the same over the phone. They all sound the same over the phone, I promise you, right? So with our clients, we either do them face-to-face or we do them through Zoom. Zoom is the #1 video conference. We're on Zoom right now, right? Everyone pretty much has Zoom. So we do them. They're about 45 minutes long, okay? We've already pre-qualified them. So we've already done the loan application. We've already double-checked that the information came over the right way, and we've already taken notes on the loan. Then I do the consultation, and I'm being an investigator. I'm going back to the application. Hey, you said you made I had a client the other day, they made 250. I was like, hey man, let's look at your income. You applied the other day, you uploaded your paycheck stub. Your base salary actually says 185. Oh yeah, I lumped it all together for you over the phone. It's like, oh, okay. And we need to adjust this here. That can affect what you qualify for. So we meet with the client via Zoom. It's about 45 minutes. We screen share all the documents we send to them. We send them a secure email with their credit report, our team sheet, 10 things not to do in a mortgage loan, right? And then the estimates, okay? And we put everything that they could possibly see on the estimates. I put surveys on there. I find it's better to always overestimate and the numbers come down than underestimate, even if it's $1,000. Underestimate and you have a client pissed off at the end. I always tell my wife, I go, all I really care about in my business is I go to HEB and my clients are like, oh, Jason, you helped me out. You did a great job. Other than them being pissed off because I lowballed an insurance quote or left off an HOA to win a deal. Does that make sense? Right? Under promise, over deliver. And so, so that consultation, we go through the credit report line by line, right? We go through the team sheet and it says, hey, this is who does what on the team. This is what the rest of the process will look like. Do you know how to upload the docs if you used it yet before? And who does what on the team? A lot of loan officers, they say, well, what processor will call you? We're like, no, this is Beverly Williamson. She's your processor. She's been doing it for 25 years. Okay, get her the docs. She's like a mortgage mom. She'll make sure she takes care of it. And so that sets up the whole logistics of everything, right? And we talk to them about the CD going out and the whole timeline, right? And then we go over at least three estimates, right? If they know they want a 30-year fix, we do one with no buy down, with a buy down, and one with a big buy down. Okay, why is that? People love options, right? And then my number one goal in that is to build rapport with them and make them make a decision. So when they say, well, do I have to make a decision today? I'm like, well, if you were buying today, which one does your gut tell you you'd probably go with? You can change this. You can change this at any time. Well, I like this 3.25% with no points. Cool. I put a big star on it. I circle it 5 times. I go, cool, this is the one. So I'm cementing in their head. The payment is $2,800, right, on this one. And your cash to close is about $38,000. So I'm cementing all those numbers. So that way, when they go out shopping, they know what they're doing. Does that make sense? Does that help out with the mortgages? Robbie's telling me he's kicking me off stage.
Oh, sorry. Do you ever have realtors come with their clients to this meeting?
Hey, I would love every single one of you to come with your clients. If you get your client's permission, yes, I would love you to. If anybody in this room wants to come to a consultation and while I'm on video and you sit there quietly, you can come to one that you don't know. I don't care. Ross, I would love to have you come and see what we actually do. And then how much easier is that to refer the mortgage guy? I've sat through his consultation. It's literally the best consultation I've ever been through. Like, at least talk to him and get a pre-qualification.
No, my biggest pet peeve is not having an initial consultation and not getting the pre-approval qualified ahead of time. And we'll get halfway through the transaction and they're asking for docs and I need this, I need that, stuff that hasn't been put up front. And then 45 days to closing that.
Yeah. So that's the number one thing. Exactly what he's saying is get him in there. Here's the best script. I'll leave you with this, and we got to take a 5-minute break. All right. I'll leave it. Here's a good script. I think Ross, you're doing some scripts later on, right? Here's a great script. All right. When you say, "Hey, are you paying cash? Are you paying cash for the house?" I assume. No, I'm not paying cash. I'm going to finance. Well, awesome. Will you have a pre-qualification of it? And they say, "What? Yeah, I got one from Wells Fargo, or I got one from online." Here's the best thing to say. Mr. Robbie, that is awesome. That is actually the first step in the whole real estate process is with the lender getting pre-qualified, right? Here's what I found, right? It's always good to have a second option. So here's what I want you to do. I want you to talk to my mortgage guy, get a pre-qualification. It's not going to hurt your credit. It costs you no money. Okay. But here's what I like about Jason. Number one, he closes on time every single time. He does the best mortgage consultation in the business. Okay. And lastly, what's most important to me, he's accountable to me. Okay. I know where to call him on Sunday afternoon at 7 o'clock. I know where his house is at. I know where his kids play sports. Right. He's accountable to me. So in case something happens with this other lender, at the very least, you don't have to use him, but at least we have a backup option. Because 65% of all mortgages don't close on time or at the terms that were promised. All right. How does it sound? Would you be offended if I had Jason call you? Do you get the script? Would you be offended if I had Jason call you to have a backup plan in case your online lender sucks? Right? No one's offended. And also what I put in there, it costs nothing, no obligation, right? That's a great way to refer a mortgage lender. All right. And lastly, USAA, I mentioned USAA and Navy Fed. Okay, with all due respect, I'm a veteran. I feel like I can say this, but they're running their business like an internet lender. Okay. I could not compete with them 5 years ago. They had the best rates. They had great service. Then they did what?
They went online.
They went online. And when they opened it up to who?
Everybody.
Everybody. Appreciate your service, by the way. Thank you. And it's not like, hey, USAA, Navy Fed are serving me and him. Do you have a cousin that's in the military? Cool. Do you have a cousin that's in the military?
Yep.
Do you have friends in the military? Cool. They all get to use them too. So their service just sucks. Okay. And here's what's sad. What they've been doing is they'll do the pre-qual letter. They won't want to give the estimate. They literally slow play the client, right? And they say, we'll mail you the estimate, right? And then when you get into it, they'll call you back and say, hey, and they'll tell you 45 days to close. Then you get halfway through it, you make the offer, you get the house. We need another 15 days. It's pretty much it. That's what's currently going with them. So that's why I lumped in there kind of with Quicken, but I hate to say it because they're a great company. And veterans like me and you, our first shot, I mean, even when I do a mortgage loan, I'll go to USA. I'm like, I'll go to USA or Navy Fed, because Navy Fed used to have the lowest rates. No one compete with them, but they both got themselves in trouble with that.
3 deals with Navy Fed.
Yeah, and so with this, I'm a veteran, so I always tell people, hey, you can call them if you want to, but you're not dealing with a veteran, number one. Like the guy in the line, it's a veteran company, if you will, but I'm a veteran. So we speak the same language. That's usually pretty good. Okay, I got to go to break.
Oh.
If you want to ask a question during the break, all right,
Okay.
let's take a potty break, and then we're going to talk about the #1 tool that will blow up your business, even in this crazy market.
No, we'll be back in 5 minutes.
Cool?
Yep.
All right, cool. Script challenges, those are fun. All right, very cool. All right, you guys ready?
Yeah.
All right, very cool. We're gonna switch gears from mortgages. By the way, this is Emily Simmons. Emily, raise your hand. All right, she's not on our team sheet, okay? So this is our team sheet of our team that we work with. All right, the ladies at the top are our pre-approval managers. All right, I'm what's called a team loan officer, okay? All right, you have loan officers. If you want to deal with the person, just that person, that's it. But if they get COVID, they get sick, they're on vacation, good luck. All right, much less give really good service. But the 3 ladies up front, Chris was 22 years experience. Cassie's 6 years experience. Maddie Cox is, she's about 1.5 years, one of the most talented young mortgage professionals I've ever had. And her dad owns Grace Point Homes. So she comes from, a long line of that. They're the people who you and I will be working with to get pre-approvals. So that way your referrals go fast, okay? So we don't want referrals to sit around for a long time. And their #1 job is to help me with the pre-approval. And somebody asked me this, I meet with all the clients myself. So I don't let them do that. I'm typically just double checking all their work. Is what I'm doing so I can build relationships, make sure I'm putting them in the right plan. Sometimes your clients are selling these houses and we're paying off half of their debt or all their debt and doing 5% down instead of 20% down. And they're saving money by buying the house. It's nuts, like what's going on with the values right now. So that's our team. And the 2 ladies at the end is Melanie Lynch. She's 35 years in the business. Beverly's 25 years in the business. So I told you I'm from New Caney, Texas. I'm not very smart. But I'm smart enough to get really good women in particular around me.
I noticed
Keep me in
that.
line.
Where are the
Keep
guys?
me in line. And yeah, guys are too much drama. So, I'm joking. All right, cool. So we're gonna switch gears, okay? So I want to share with you guys the #1 tool. I told you a little bit about my journey in the mortgage space. I told you I did it for 10 years wrong. Yeah, I did it totally wrong. Like I remember being a mortgage broker. So I was a mortgage broker for probably 8 years of that. So I know a lot about mortgage brokering. Okay, and then I remember I would go to work. Tell me if you can relate to this. I'd get in. Guys, it's gonna be a good day today. It's military, so I'm always early bird. I'm gonna start at 8 o'clock. I'm always typically on time. I'd go check my emails, look for people who may have contacted me. I might write a couple thank you cards. Then I'd go over to my buddy Mark and be like, hey Mark, what are we doing for lunch? I got a couple of my emails, right? And then we figure out we're going to lunch. We take an 1.5 hour lunch, come back, check some more emails. Hopefully someone likes me, right? I had no structure to my day. No one really taught me how to get business. You guys are very fortunate at Keller Williams that you have a lot of good training from Robbie and the team and Ross. Now I'll tell you what I'm going to share with you today is probably nothing that you haven't heard unless you're brand new. A lot of this stuff coincides with what Gary teaches. Okay. It's maybe just said in a little different format. What I like about this is how to generate more referrals than you possibly can handle. And this is a greatness tracker class. Okay. So everyone wants to pick up this little handout here. Okay. This is the handout we're going to go over. It's called the greatness tracker. All right. So a couple of things. So when I found this coaching program that I'm in now, so everyone write this down. You need a mentor. I don't care who it is. I just happen to fall into this one particular mentor that I clicked with and I did really well, so I've stayed with it, right? When they're not serving me, I'm not learning anything, I'll switch mentors, but you are a sum of your environment, who you hang out with, okay? And I've been lucky to have really good mentors in my life, even from a young age, with Little League baseball coaching, with high school football coaching. Then I got to play for Fisher DeBerry at the Air Force Academy, which is in the Coaching Hall of Fame. Then I went and played for Gary Patterson, which will be in the coaching college football Hall of Fame. And then I got out and I was like, well, what the hell do I do now? Right? And I was in a sales job. Okay. And I have a finance degree from TCU. No one told me. I literally got my finance degree because I looked at the girl next to me, a girl at church, and I go, hey, what's your major in? What are you doing? She goes, what do you want to do? I was like, I want to make some good money. She goes, well, you should do finance. Okay. Because if you do finance, you control people's money. Therefore, you'll probably make a lot of money. And she went to Baylor and all that stuff. And I was still in high school. I was still like a freshman, or I was still in high school, right? Okay, cool. Finance sounds good to me. Well, no one told me that the typical finance person at the finance degree, do you know what they typically do? They sit in a cubicle and they look at spreadsheets of profit and losses and budgets, and they do analyzation. Could you imagine me sitting behind a computer all day doing that? That wasn't my personal, but I did the degree, I graduated, got it. And then I got out to do this loan officer gig, and no one told me. I was like, my dad was like, why aren't you making any money? He was like, you got a degree, because I was the first person to go to college. He goes, you have a degree. You're supposed to get out making $50,000 a year because you have a degree. I'm like, yeah, that's not how it works, man. Like, it just doesn't work that way. So I had a finance degree from TCU, and then I graduated in 2001. Does anybody know what happened in 2001?
911 or
9/11. Okay, and the market crashed. All that went together. So I would tell you, I stayed one extra year at TCU because it was fun, right? I had a great time in college, playing college football. I was gonna stay there as long as I could. But with my injury, I got an extra year. So I was supposed to graduate in 2000 with a guy named LaDainian Tomlinson that's in the college. He's in the Hall of Fame in the NFL. And then they said, well, since you got hurt, we can get you an extra year in your scholarship. And I went to a career fair, not joking you, in 2000 with a finance degree. And in the gym at TCU, there was probably 150 employers. You walk around, they're like, oh yeah. And they were saying, you're from Peru, right? They were like, hey, if you want to go work in Peru, if you want to go work internationally, we'll pay you $60,000 a year. If you want to, I was like, I don't have kids, I'll travel, I'll go wherever. And literally, you could just go in there and get a job, basically with a finance degree. Then 9/11 hit. The next year, you want to guess how many people were at that same career fair? I'm not joking you, about 10. 150 to 10. And they were all $25,000 salary plus commission. Okay. And so I just kept being a loan officer because I did it as an internship. But no one ever taught me. It was a sales position. I wasn't a natural sales guy. Raise your hand if you don't feel like you're natural sales, right? And then I became a loan officer, which is nothing but sales. So, and this tool, I ran this coaching program, and this tool has changed my life because it's given me structure to my day. It's given me, like in the military, you have a mission. It's given me a mission to do every day. And it's helped me to generate a lots of referrals. So I want to start off with this. That's my pain before I bring into this greatness chapter. Okay. If I can be transparent with you guys, before I started in this forum till after, 20 times the amount of income. I'm not joking. 20 times the amount of income. I made 20 times more. If I look at what I make today versus before I do that form, it's 20 times the amount I made before I started doing this form. Okay. So on the top of your sheet, I want you to write this down, or write it on the side of the paper. I don't care, at the bottom, right at the bottom. I am a professional, what? Finish the sentence. You don't finish the sentence. Realtor, right? I am a professional realtor. You are no longer professional realtors. All right? You are not a professional realtor. You got it? You did all the schooling. You came to Keller Williams. I'm here to tell you you're not a professional realtor. You are a professional relationship builder. That's what you are. Okay? I would say salesperson. I like that one better, but many people have negative connotations to what? Salespeople. Do you really have a negative connotation on building relationships? I think that's what sales is really what it's all about. Sales is about building relationships and finding a need that you can fix. That's it. All right. So I don't see what's really negative about that unless you do it the wrong way. All right. Okay. So this form, a couple things about this form. It's not easy. Okay. It's not easy. Okay. I'm not here to tell you I have a magic pill that you can take that's super easy that you're going to 20 times your income overnight. Right? Is that the magic weight loss pill, right? It doesn't exist. Okay. I was listening to Ed Mylett the other day, and he was interviewing the founder of Starbucks. Everyone agrees Starbucks is a fantastic, it is like a phenomenal company. If you look at it, right? What they've done. All right. And the founder of Starbucks goes, man, I don't really understand what this deal is in today's society on the negativity towards hard work. I don't know what it is. He goes, I don't know if it's new generation. I don't know if it's technology and everyone has instant gratification, but there's a negative connotation from hard work. Everyone wants to be a what? A big thinker. They want to be a big influencer, right? But would you guys agree? There's a negative connotation right now with hard work. If I told you my dad was a diesel mechanic, like, oh, okay, cool. That was a really good profession when he was raising our kids. It was an apprenticeship. People have negative connotations on apprenticeships, but it's really the hard work. All right. All right. But this form is hard work. But if you commit to do it, it won't matter your environment. It won't matter there's 150 listings. Okay. So here's what this form does. I want you guys to write. You guys tell me, I'm not a realtor. What's the average sales price of a house in the Woodlands? Average.
350.
Huh? No, it's way too low.
Like 520.
I mean, I know the answer. 525. It's about the average. Okay. Right. I don't think you can do it. You barely can get it for 325. That would be a beginner house in the Woodlands. 325. All right. So let's do this. Take 500,000 times 3 times it by what do you guys paid?
3%.
3%. Highest commission splits in any industry. Doctors don't make any. I talked to a OBGYN. He goes, I make about 1,500 to 2,000 per baby I deliver. I deliver about 300 a year. An OBGYN doctor. That's what he makes after he pays out. You guys make more than doctors. So what's the number? 15,000. Okay, so I may ask Ross, I may ask Robbie this. How much time do you, okay, on one closing, $500,000 deal, Robbie? All right. And be honest. How much time do you really spend doing that one deal? How many hours would you say it is, Ross?
Me, myself.
Just
3 to 4.
Yeah.
Oh my God, 3 to 4?
Yeah.
Okay.
Two.
No.
Amazing.
That's cool. 3 to 4. He has a team, so his is a little bit higher. What's your answer? I mean, really think about it. I meet the client. I have a 10-minute conversation. Oh, you're so-and-so sister. Cool. What do you want? I'll show you houses. You go show them houses. Maybe in this market, it's a little bit longer because you lose some of the offers, right? But how many hours total on one $500,000?
Yeah.
I'm gonna say easily 40.
Easily 40. So I have
Online,
40.
what else saying?
I have, hey, I will work with your number. 40,
Including fun.
start to close.
Including fun.
20 hours.
20.
No way it's free.
Yeah.
Mhm.
15?
So we need to teach a closing class, so it's taking you 60 hours.
15.
50. Okay, so I have 40, I have 15. Okay, so here's what we're gonna do. All right. I want you to take 15,000. Okay. I want you to divide yours by 40. You said 40 hours, right? And everyone else do 20.
Divide to 15,000.
Yeah.
750.
750, right? Okay. So 750. Correct. Then I want you to,
That's right. Free split, but I mean.
so it's $15,000 total, right? So it's 750, right? And let's just say you work 40 hours a week, times it by 40.
30,000
Times it by 52. So,
times 30,000 by 52.
yep. 1.5 or 1.1?
1.5.
1.56. You take twice as long to do the transaction. So yours is $780,000. Okay. So I want you to all write this number down because that is your hourly rate.
But I am working on that.
No, it's fine. I want you to write your hourly rate down. Okay.
375.
$375 an hour. $750 an hour. Okay. Are these numbers kind of strange? Does it sound shocking to you? Because these are real numbers. These aren't fake. I'm not making these up. You told me the numbers, right? Okay. So $750. I don't know anybody. I have a friend of mine who works for Winstead. He's an attorney. He's a partner at Winstead. And I know what his base salary is, and he gets $750, he makes $750 an hour, okay? And he bills out at 500, he bills at $500, $550 an hour, and he gets partnership income. Yes.
So people here that know me know, this is not to be negative, I'm just a realist. So that's of whatever I do that goes to closing. So we do a lot of work for free. So my hourly rate is.
He's just giving you a general.
I know, Rob.
So if you make $300 an hour, okay, we teach you how to not work on the bad deals, then we'll figure out that too. So that's what, I think you were the one that asked me, or that you were the one that said, your job is to know all the loan programs. But no,
that was Stacy.
okay, but Stacy, no, my job is not to know all the loan programs, right? Nor is it to work with all the clients.
Young agents to understand, young and experienced.
If you added up all the hours that took lead generating to get to that one.
Yeah.
That's a whole other
Right.
story.
So, Ross, thank you. You have segued into my class, okay? Thank you, Ross, okay? So this form, here's what this form is. This form, what it really does, it helps you track your red time versus green time. Because if you're like one of my realtor friends, I won't mention his name, but he's on the top, one of the top in Keller Williams. He still has to sit down at night with a beer and write all of his property descriptions, all of his listings, because no one else can do it as good as him. Okay, that is red time. Okay, so before we get in this form, you have to differentiate yourself. What is red time? What is not making you money? Okay, that's where leverage comes in.
Red time will be that, red time will be.
Yeah, so what is red time? Good question. Red time, okay? Red time is anything that you're not selling, lead generating, okay? So examples would be doing your own property descriptions, okay? It might be submitting your CDA to Keller Williams, right? Anything where you're not in front of a client, talking to a client about real estate, about buying a home. If you're not at a closing with a client, right? If you're not at a closing with a client, I think the easier way to say is, what is green time? Okay. Red time is not lead generating and not making you money. Anything that's included in that.
The marketing will be also red time, right?
Doing the marketing is red time, 100%. Well, if you're producing the marketing, right? That is red time. Okay. When I do my profit loss for my company on Market Street, that's red time for me. I'm not lead generating. I'm counting the money. Does that make sense? Okay. Red time is nothing. Is when you're out of lead generation time. Because if your dollar per hour rate is 500 to 750, what does it make most sense to keep yourself in? Green time, in front of clients, closing deals, calling to get more clients, right? Writing thank you cards, that type of stuff. So that's what this form is about. Because I don't know, you can tell I'm a little energetic, right? Well, I'm also can chase shiny objects. So if my friend calls me and says, hey, let's go do this, I'm like, oh, yeah, let's go here, right? So I'm not naturally wired to focus, okay? This helps me focus. Also gives me some calmness about what should I be doing in my business, okay? And there's nothing wrong with what you're doing, but once you start tracking it, once you start tracking it, that's when you start building the leverage out. But here's why you haven't grown the leverage yet, because you haven't understood your dollar per hour rate. Okay.
So would you put showing in green time?
Yes, you're with the client.
Did you put
Correct.
writing offers is not though?
No, not at all. That's red time.
So nurturing a relationship one way or another.
Yes.
With your leads and your
Is
clients,
green time.
that's green time.
Either you're with the client to close the deal, or you're generating new deals. That's green time. Everything else is red. Everything else is red. Okay. And you can't be in green time 40 hours a week, right? But when you start tracking it, I think what you'll find is a lot of us stay in red time not to do what?
Avoid.
Where everybody's in.
Yeah.
Right? Because you really have a fear of, you have sales call reluctance or you have a fear, okay? So, but this form will help you get through that, okay? Take it from a guy from New Caney who's not very smart, who has never taught sales in his life, that my coach said, hey, dude, if you just do this form, you'll make a lot of money and you'll help a lot of lives, okay? You'll help a lot of people get home. So, okay, coach, cool. All right, so let's walk through this thing, okay? So we understand why we're doing it, because what is your dollar per hour rate, okay? Cool. I don't see the doctors. Do you ever see a doctor's on the phone with the insurance company trying to get his money? No.
Or making the appointment.
Correct. Or making the appointment. We can get really deep into this, right? All right. So let's look at this form. Okay. This is called the greatness tracker. All this is tracking your green time. Okay. All right. And this is specifically made for a realtor. I have a lender version of it. So the first thing we want to do, okay, is we want to get what with our clients. What did I say earlier? I said, I don't allow phone call consultations. I only do what?
Face to face.
Zoom and face-to-face, okay? Because, put it this way. I met my wife at a bar. It's true story. My wife at a bar. She was an identical twin. She's Latina, right? And they both looked the same. And I was like, oh shit. They both look really good. What do I do? So I bought them both a drink, and she thought that was cute because no one ever gives her, no one thinks of that. So then she gave me her number. Because the only reason I gave you my number, she said, I'm Latina, I play hard to get. And the reason I gave you the number is because you bought my sister a drink too. So she gave me the number, okay? Then I had to do what? I had to call her, right? Of course, my head starts spinning. Like, should I do the next day? Should I wait 2 days? Do I look too desperate? What should I do, right? I'll call her the next day, okay? So I'll call her the next day, right? To do what?
Ask her out.
To ask her out to do what? To get face to face. I had to get face to face with my wife to go to the next step, right? With your clients or whoever is going to send you a referral, you got to get face to face. Okay. So what counts as a face to face? So when you're meeting a client for the first time, right? We do a virus consultation face to face. That counts as a face to face. Cool. You go meet with a CPA, right? Hey, you're a CPA. I'm a realtor. We can help each other. I can send you business. You can send me business. Sitting down talking about business. It's any meeting face to face. We're talking about doing more business or you're closing a deal. Okay. I wouldn't count a face to face for the third or fourth showing. Does that make sense? I would do it for the first showing. I would probably count the closing as well too, going to the closing. But if you go show them properties 10 different times, I wouldn't keep counting those as face to face. You agree, Robbie?
Right.
Okay, cool. And you correct me if I'm, because Robbie's done this for him. He's a realtor, so you help me out here, okay? Anybody have any questions? And it's with face to face with new leads, closings, past clients, influential people that can send you referrals. If you want to go down to the Veterans Association, you're going down there to meet people with that and get more referrals, right? I like it that you're a veteran because you can really work that sphere, right? Veterans trust veterans, period. Okay. All right. But you go down, you talk to those guys. That's a face to face. I'm talking about you go sit down with a builder sales rep and say, here's why you should use me. Here's what we can do together. That is a face-to-face appointment. A listing appointment is what? Face-to-face. All right. That counts as a face-to-face. If I'm missing anything on the face-to-faces. Okay, cool. Any questions on what a face-to-face is? Cool.
Not meeting with your best friend.
No. If she is, I'll take this back. If she is, no, this is important. If you have a best friend who sent you 20 referrals, and you're like, I'm going to go take her to coffee if I can get some more business, yes, that counts as a face-to-face, 100%. Okay. If you're just going to go and not talk about business and drink mimosas on a Sunday afternoon, that doesn't count. Okay. All right. But yes, she's a VIP for you. That's what she is. Okay. My wife, I can't count her as a face-to-face every day, but I pretty much finance the whole Latino family. It's a big Mexican family. I finance all of them, right? So her mom has referred me a lot of business. Okay. So you want 15 face-to-faces, 15 meetings, face-to-face a week. Clients in process, new leads, going to closings, and with people who can refer you business. Okay.
Basically 3 times a day.
3 times a day. If you work 5 days, yeah. I always hear y'all work 7 days. 7 days. I always hear y'all work 7 days a week, so you can break it down like that. Okay. If you're having a buddy meeting, you can count that as 2. All right.
Open houses.
What's that?
Open houses.
Open houses to me are face-to-faces. All right. If you're having a conversation, don't count the open house if there's 50 people there and you talk to 3. Don't count 50. But if I had 3 conversations right here, I got their numbers. I can follow up with them. Yes, that counts as face-to-face. That's a good one, Robbie. Yeah. Talk to him about real estate.
Okay, so here you're giving yourself an opportunity to have 3 touches per day.
Correct.
Okay.
And sometimes, quite frankly, sometimes I'm having 5 in one day and none one day. It just depends on your schedule. All right.
I just want to understand the
Perfecto. All right. Who is the best salesman in the history of the world? Anybody want to guess?
Me?
Steve Jobs.
Steve Jobs.
Augmented
You?
reality.
You raise your hand. Is it you? Okay. You the best salesman
Why not?
in the world? I like it. I like the style. I like it.
Mhm.
Who's the best salesman in the history of the world? No, Jesus Christ. Jesus. He's the best salesman in the world, right? He's got the most followers. He has the most influence, right? You may argue and say it's Allah or somebody, but it's Jesus Christ. He's the best salesman in the world. What did he do with his disciples? What did he do with his disciples?
Trained him.
What did he do with his disciples? We're talking about sales.
He
Did
chose
he
them.
call them on the phone?
Face to face. Met them face to face. Broke bread.
He broke bread with his disciples. It says it in the Bible. He broke bread. The best way to sell, the best way to build a relationship, right? When I go to my wife's family house, we go break bread and we spend 5 hours. I mean, everyone gets there an hour late because they're Mexican.
Right? That's normal.
White people show up and we're like, where's the party? I'm like, well, they'll be here in 2 hours. Right? And we break bread for 6 hours. We drink tequila. That's the best way. That's the best way to sell. Okay. If you get a builder sales rep to lunch, it's a better way to sell. It's harder, right? Especially in today's environment, because no one wants to take the time for an hour lunch, right? So it can be a lunch. It can be a coffee. But most of my break breads right now, I go to Conduit Coffee over here, right by Glenlock. It's a cool little eclectic little coffee shop that is privately owned. You go sit there. I do a lot of business deals there. Okay. Conduit Coffee. All right. But it's just a cup of coffee. I can have a cup of coffee in the morning and the afternoon. I'll tell you this little secret. All right. I like to block things together because sometimes it's easier. Like if you say, hey, Wednesday is my face-to-face day or Wednesday is my break bread days, I like to block things together. There have been times, I'll be honest, when I've scheduled 5 realtor appointments on a Wednesday at Starbucks on Market Street. And it'll be at 9, 10, 11, 1, and 3. I'm literally walking in there with my little cup of coffee, sitting down. I'll sit down with Robbie. We'll talk. We'll break bread. We'll strategize and do business. Then he'll leave. I'll walk out. 15 minutes later, I'll walk in and like we're sitting down with coffee. Okay.
Yeah.
Right?
You're
Yeah. The trick is not to keep drinking the coffee. Right. I haven't had coffee in quite a while. Okay. But you guys understand the concept, right?
Yes.
You could go to a builder model and sometimes there's 2 or 3 builder sales reps there. Take them all. Take them lunch. Sometimes, hey, I'm bringing them lunch. What do you want? I've never heard a builder sales rep turn down lunch, by the way. Okay. Right. Hey, I'm bringing lunch for you and your partner. What do you want? Cool. I want this. You take them lunch. That's break bread times 2.
And are we facing?
No,
double dipping?
separate. Look at you. See, she's trying to get back in her red time already. You're trying to get back in the red time. Can I just count this twice so I can go? I want to go do my disclosures. Yeah. I'm only poking fun because I was that guy. Because this is not easy. I still do it sometimes. Emily would be like, dude, when you get out of the office, like, oh, I got to lock the phone. Hold on. Crystal can't call and lock the phone. I need to do it. Right? Okay. So break bread. Any questions on break bread? Pretty simple. Okay. All right. Totally separate. Yes. So we're asking to have 20 people a week that you're meeting with. Okay. I didn't say it was going to be easy.
I was thinking like, these are big.
Pardon? That's why I do coffee. It's way cheaper. I made the mistake a long time ago. There's an old realtor that used to work here. I think Ross probably knows who they are. It was a family. They're not, I don't think they're killers. But they were king of, yeah, let's go to lunch. Where do you want to go? Let's go to Jasper's. Let's go to like these $100, $200 lunches. And then you would see no business. So coffee is a great way to meet someone that's very just chill. Anyone can have a cup of coffee. You know what I'm saying? Right. Or a beer, whatever your style, a beer, right? Maybe you're scheduling your break breads at 4:30. Say, hey, I get off work a little bit early. I'll meet you at 4:30. We'll have a couple of beers to go. All right. All right. The next one. All right. The next one. Okay. Great phone calls. Great phone calls. Okay. So in order to set the appointment with my wife to go break bread for the first time at Crew Wine Bar, I had to do what?
Make a great phone call.
I had to make a great phone call. I had to pick up the phone. With one phone call, and I was nervous. I had butterflies in my stomach. I felt like a little teenage boy. I was 31 when I met my wife. So I felt like I was in high school all over again. I don't know. Maybe she'll answer. Maybe she won't. Should I leave a message? Should I not leave a message? Right? No. Somebody asked me one day. They go, "How did you choose between the two?" They were both identical twins, and they were both at the bar. I go, "I chose the better looking one, of course." Not falling for that one, right? How did you choose? All right, so great phone calls. Okay, great phone calls.
Okay, so
60.
We have a great phone call that leads, so we get a fill in. the
You can
blank.
double dip
That
those.
Leads to a face-to-face.
Now you're getting it, right? So you gotta have the phone calls. So you were saying, dude, how do I do 20 a week? Well, dude, you gotta make a phone call, right? 60 phone calls a week. Pick up the phone, call your clients, okay? Here's what counts for great phone calls, okay? Calling new leads, calling old leads. In our office, we do a Tuesday loan update call, okay? There are 2 reasons why I actually do that call. Mandatory. Our team, I was in Playa del Carmen. I wasn't here. The team did it. I usually make the phone calls, but I was gone, so the team did it. Do y'all want to know why I make those phone calls? 2 reasons.
Relationship.
Well, I'm calling clients. So I call the client and both realtors every Tuesday. I make those phone calls to make sure I close the loan on time, which is my #1 job, right? So I'm looking at it. Here's your update. It makes me look at the loan and make sure we're on track. And if it's not, it makes me say, hey, we're not on track. We need to fix it. Right? The second reason I do it is because I want some referrals to build a relationship. I figure in a process of what, 30 days, right? I have a captive audience for realtors for 4 phone calls to call a realtor, update them on the loan. I also have the client to update them on their loan as well too. If it's a builder sales rep, right? I can update them as well too. Okay. So I'm calling to build trust so they'll refer me. I say, hey, I'm going to call you. We do a loan together. I'm going to call you every single Tuesday to update you on your loan. Sound good? How do you feel about that? I feel great. Feel great, right? And then I actually go do it. Right? Hey, Robbie, guess what today is?
Tuesday.
It's Tuesday. It's your Tuesday update call, man. Here's where we're at, right? And that builds what? Trust, because you're doing what you say. And it allows me to earn the right to do what? Ask for a referral. That's how I feel. Makes sense? So that's why I do the Tuesday updates.
You count if you delete a message.
I do. So for beginner class, I mean, some people in the court don't delete the message. I do. Let's just focus on making 60 phone calls. Sales phone calls out. Okay. So if you're calling your client that's in process that has a listing, right? Oh my gosh, don't freak out. It's been 5 days. I haven't sold your house yet. It's coming. There's lots of showings, right? Cool. How are you feeling about the process? Awesome. Cool deal. Well, here's the feedback on this. Here's the feedback on that, right? Cool. How does the process feel? How am I doing for you? You're doing great. Cool. Awesome. Hey, can I have your fit? Can you help me out with something? What's that? She just told me what? I'm doing great. Cool. I love to work with clients just like you. We're going to get this house sold. I promise you, I'm going to get this house sold for you. But I love working with clients like you. Can you just help me find one person by the end of the year that you can refer me that I can help take care of? Just one? You look at me crazy like that?
Yes.
Yes. Okay. Perfect. Cool. It's usually like, oh my gosh, come on. It's January, what, 20th or something? Can you find me one by 2023? Right? Okay, cool. So that is that's a sales call at that point, right? And I feel like I've earned it at that point, right? Okay, cool. But it's great phone calls. It says it right on the left. So I told you I'm not very smart. It says it on the left. It says with leads. It says referral partners. It says past clients and current clients. Okay. You can also call business people. If I was a realtor, I'd call builder sales reps. I'd call business people. And of course, all your friends and family and sphere. Okay. Cool. If you're doing database calls, Gary teaches to have a big sphere, right? You're going to close a certain percentage of your database. It's just math, right? But if you're doing database calls to check in, that counts as a phone call. Hey, it's Jason, it's your favorite realtor, man. Just calling to check in on you. How's the kids? An easy tactic for a conversation on these calls, write it down, is FORD, F-O-R-D. F stands for what? Does anybody know? Family. O stands for what? R is what?
Recreation.
And then D is what? Cool. I write it. Sometimes I write it really big because I told you I have ADD. Sometimes I'm running around, but don't forget to talk about these things, right? Sometimes we talk about them, sometimes we don't. If you get in a good conversation, you don't have to worry about the Ford, right? Most people today that you're calling the database want to know what? Dude, how much could I sell this house for? Right? How much could I really sell that house for? Right? Okay. Any questions on who the phone calls go to? Okay. All right. Events. Dreams. I will give you a tactic. When you make these phone calls, we have an all about you form. Okay. If you want to get it, Emily can get it for you. The all about you form. Ask you what's your favorite restaurant, what's your hobbies, what's your dreams. Ask you all that. Okay. Ask you all those questions. Okay. I sometimes have the form sitting out in front of me. That way, as I'm talking to the client, I'll know what the dream is next time. Right. I'll know that they're working at Exxon. Hey, Cole, you still working at Exxon? I took notes last time. How's the job going at Exxon? Right. So that all about you form helps you do that. Okay. Anybody interested in the all about you form? Cool. Also has kids' birthdays on there. It has it's called the fun part, which is all the restaurants, vacations, if you have pets, what pet's name is, the kids, their ages, that type of stuff. Then it has the boring part, which is who's your financial planner, right? Who's your CPA? Who's your probate and will attorney, right? So it's all that. So you can get all that data. Right? So 60 great phone calls a week. The next one, events. All right.
Is it 60?
60 phone calls a week. Vinny does 120 Vinny made 120 this morning. Events. Vinny, what sort of events do you do? You do all kinds of stuff.
Yeah, baseballforbabies.org.
Cool, baseballforbabies.org. Why do you do it, Vinny? I mean, you do it to help out, right, too? How does it help your business? You're giving back.
You give to the universe will give back.
Tenfold, right? Tenfold, okay?
My mom taught me that when I was 10.
Cool, you're talking to one of the best old school realtors at Keller Williams right here. All right. He does events. He does it to pay it forward and to connect with his clients. Okay. So it can be a charity. It can just be a client party. We do once a year, we rent out that park, Rob Fleming Park in Creekside. Just a way to get back to the clients. We got a big ass barbecue trailer out there. We got kids face painting. We got DJ. We got soccer. My kids are 9, 7, and 5. So my client parties when I first started the business, Vinny, we're all at the bar. Right? Just be yourself. Okay. Don't overcomplicate this. So now I got a 9, 7, and 5. So where are my client parties? They're at the park. Right? They're at the park. Right? Maybe we'll do a petting zoo. I don't know. Right? But we are in the Woodlands. It's the land of the kids. So it's a good way to connect with your clients. Charity is a great way to, I love that baseball. I want to know more about that.
So
Yes.
do you pay for that, right?
Got to pay for it. Right. What did we say your hourly rate was earlier? $750 an hour. Okay. Well, if you're in spring, it's $350 an hour. Okay. If you have a client, you make 3% on a $500,000 house. I'm only saying that because lenders make like way less than that. Tell us, right? All right. So my point of it is, you go have 25 of just get your family together, right? You have 25 of your family together, you go to a little party and say, hey, I'm new to real estate. This is what I'm doing. I'm going to feed you. We're going to have some drinks. I want to just tell you what I'm doing. That counts as an event, right? Sponsoring an event works as well too. I like events that, giving back is a great, I can't say too much about giving back. That's a great way to do it. Okay. You could go to an event. You could go to the Chamber of Commerce and sign up for that. That's going to an event. So don't overcomplicate this. You're just going somewhere. Sometimes it's putting on, sometimes you're just going to an event.
The arts festival.
Right. The Chamber of Commerce is a great way. It's cheap. You show up, they do speed dating right there at the Chamber of Commerce. You get to meet some business people. They need business. You need business. It's very easy. They do speed dating. Yes. Okay.
Does the school events?
Pardon?
The school events.
School events? Maybe. You have to tell me more about the school event. Like I paid like $200 and sponsored the face painting at my kid's school, and I had Cherry Creek out there. I went out there, had my kids all face paint. Oh, yeah, so that would count. Something like that would count.
Do you qualify events as like your people know what you do, or like I'm in junior league? Would that count for you?
And do you use marketing? Because it's a network. Do you use anything?
So you guys are overcomplicating it right now for my form, okay? I told you I'm from New Caney, Texas. You're asking me questions. I don't know. I just know I go to a group of people. I shake hands. I meet them. I'm like, hey, what do you do for a living? Hey, what do I do for a living? That's an event. No, don't think real estate doesn't have to cost a ton of money, especially in the Woodlands or in Spring or Klein or wherever you're at. Hours prospected. Here's the money, right? I just heard we calculated earlier. that, and $500,000 average sales price, which is about right. Your hourly rate, $750 an hour. That's more than most stuff. That's more than all the doctors in the Woodlands, except for maybe 2 or 3 surgeons, right? So you want to track your green time and red time, okay? Y'all ever seen those little checker timers? Checker timers, you hit the button, you hit the button, hit the button, and hit the time. So one good way to track your sales, especially if you're doing a power hour, hit the button, see how much you're actually talking to people, right? Versus I made 5 phone calls, I got distracted, I'm gonna answer this email, I'm gonna upload the listing, I'll go back to my power hour, right? So track the hours of prospecting you do a day. You're going to be, Ross, what are they gonna be? Absolutely shocked.
Yeah.
How much time you don't sell. Okay. Here's tactically how I do this for them at the end of the day. I'll go through my day. I'll track my phone calls. All right. I'll track my face-to-faces. I'll look at my calendar. Okay, cool. This is what I'm doing today. Right. And then at the end of the day, I'll make sure I write all this down if I hadn't. Okay. The other thing I do is I brought this clipboard in here. Okay. I travel around with a clipboard. Very fancy. I literally have a tack in my fancy little office on Market Street, and I hang this on the wall doing that. I literally hang it on the wall, and I pull it down when I start calling Tuesday update calls. When I start calling to ask for appointments, I'll start tracking the phone calls. Okay. If I'm meeting with a client. Pardon? No, you write the name. You write the name. Here's the trick. Tally markers means you probably didn't do it. You write down the name, you probably didn't. Okay. I've been caught doing plus 10 calls. My coach was like, plus 10 calls. Who'd you talk to? Probably didn't make the 10 calls, right? All right. Yes.
So what's the difference between hours prospecting and like calls?
It's the same thing. Hours prospecting is green time. We went over green time earlier, right? It's if you're in green time. And I know I have some overthinkers in the room. If you met with a client for a listing appointment, if you were there at 2 hours, you're probably there too long, right? But you can count the 2 hours. It's green time. You're in front of a client. You go to a closing with a client, you're face-to-face with the client at a closing, that counts as probably an hour prospecting, right? You do a power hour and you call for an hour. It was 52 minutes, who cares if it's an hour, okay? So don't overthink these things. The trick is to track it, because when I first started doing this, I was scared shitless. They're like, wow, you're telling me I worked 5 days and I really did what I was supposed to be doing for 3 hours? And that's because I had 3 client consultations? What did I, and I was more fearful of, what's my closing? Like, here's the deal. You do this form for a month straight, you'll start seeing leads pour in. Okay. You'll start seeing leads pour in. Okay. Step 1 is to track it. If you don't track it, you're never going to get better. And are we not being tracked on everything in our life these days? I heard that on the podcast too. It's like, dude, you're being tracked for everything. We just don't want to track ourselves, but you're being tracked. You go on Facebook, you're being tracked. Right? We go Google something different pops up for me than it does Vinny. You're being tracked on everything, right?
Me especially with people bracelet.
Yeah, it's tough. It's tough. Hey, that's a great spirit to work the prisons, right? So hours prospecting.
It's a captive
Okay?
audience.
Track the hours you're actually prospecting in green time. All right.
Can I support you though? The accountability on that sheet gets you to the yeses. The yeses keep you motivated to the consistency point. If you're not consistent long enough, you're just going to face all the no's you have to get through to get to the yes, and that's why you're going to quit.
Yeah.
So I love your accountability because it gets you to the yeses, which motivates you to be more.
100%, 100%. It also gives me, sometimes I'll wake up early, and I'm an early guy, so I'll wake up. Anybody ever sleep and then wake up, you all of a sudden have thoughts pop in your head, right? Like where's my next deal coming from? Like, where's my next deal coming from? Is there any more, is there now more, is there less listings now, whatever? If I just complete this form, this is like the military thing, right? Just give me a mission. I'll go complete the damn mission. If I just go fill out this form, make it really simple and track it, whether it's good or bad, I'm at least tracking it. And then when it's good, I know I've done all I could do. Like if I have a bad month and I had full greatness trackers, it's just the market, right? But I can guarantee this. It doesn't matter if there's 150 listings in the Woodlands or not. If you do this, you're going to close deals. All right. Thank you cards. Good old fashioned handwritten thank you cards. All right. They go a long ways. Why? No one does them. No one does them. I'm going to pick on, if y'all do this, you'll have to excuse me. But the send out cards. if you get send out cards, they're not cheap. They're what, 2 or 3 times the amount of a old fashioned handwritten thank you card. And they're just not personable. I don't care if you go to my Facebook and pull pictures off of it or not. The old school handwritten thank you card, telling someone, man, I really appreciate your time at coffee. Here's, and put something you learned from it. I really appreciate the time. Look forward to work with you. It goes a long way.
Print a picture out on your computer.
You're overthinking it, just write the thank you card. You've been overthinking it all day. You know why? Because you won't write the rest of it, okay? You're overthinking it. The thank you cards for some people are harder to do than the phone calls, right? Some people would rather write the thank you card and say, I sent thank you cards so I don't have to call. Right?
The thank you card thing is so easy, y'all. If you just thank them after you talked to them the first time, thank them after you met them the first time.
Oh, hey, listen, we have so much to be grateful for in the Woodlands. I mean, we live kind of in the utopia. We're voted the #1 place to live in all of America. Okay? Of all American. If you work spring, you're next door to the #1 place in America, okay? If our values, if our average value is 600, you're gonna be coming right behind it, okay? So that's a good thing. All right, lastly, if you're gonna do all the work, you might as well track the progress, right? The results, track your referrals. So down there, you're tracking your actual referrals that you get. Okay? How many referrals did I get today? As a realtor, if you can get 10 referrals in a week, that's a lot.
Yeah.
40 referrals a month, you're gonna be having to get some more leverage. Okay? And you track all of them. The only ones I don't track, if you pay for Zillow, you don't put up these leads on this form. The leads you pay for on the internet, you don't put them on this form. Okay, we talked about that earlier. Those are paid for leads, those are different.
And
Okay.
Jason, are you doing anything for the referring partner?
For the referring partner,
There's an incentive referral.
I'm writing them a handwritten thank you card. Yes, sir. Absolutely. Handwritten thank you card goes right out. Okay.
Yes, sir.
So what if we did a Facebook ad? Like Ross does, count those as leads?
Probably not.
That's fine. I pay for the ads. So
I put them,
I pay for it, I don't count it.
I would not, I'm talking about what's the longest lasting business? Personal database referrals is the best business. Okay. And then you're on track how many listings you got, how many buyers you got. Okay. We track our referrals. I would put any internet referrals on a different form. Is what I would do. Because I'm tracking what? Well, I paid $1,000 for these Facebook ads and I got 4 leads. Wow, that's really cheap. $250 a lead, right? Or you track, I paid this much for it and I've had this many closings. Okay. And then I would like you to look at your profit margins on the internet stuff versus the one you went to Vendy's charity and he got a referral from one of his clients. Much higher profit margins. The warm referrals typically don't ask you for a discount. Okay. So listings and buyers. All right. So anybody have any questions? This is the form. All right. Yes, ma'am.
Your hours prospected, is that not the same as lead? I'm confused on the overlap. Like your basic, okay, so we have face-to-face, we said breaking bread is not face-to-face. Your call time, you get your face.
All of that is prospecting. All of it is. You go to an event, it's an hour long, it's an hour prospecting. Okay.
Okay, so
Yes, ma'am.
so that's your hours.
Anything, yes, ma'am. Anything you write on that form is prospecting, right?
So like, is that an additional, like, profit? Okay.
No.
Got it.
You write thank you cards.
Hey.
Yeah, absolutely. We're tracking, you make $750 an hour. We're tracking how much time are you spending generating income at $750 an hour.
Jason, you know what I really like about this is a really good visual representation of how much work it takes to get the little down at the bottom. Like,
We can
this
teach
is the work part.
Yep.
Here's the reward.
Now I can teach you in another class, another HIIT class on the theme weeks, like how to make 60 phone calls, dude. Right? Well, you eat an elephant what? One bite at a time, right? So maybe Mondays I call my VIPs. You make a list of the top 20 people in your life that you know, like and trust, and know, like and trust you, that are your VIPs. So you're calling them on Mondays. Tuesdays I may call builder sales reps. Wednesdays I'm calling through old leads, right? So you break it down in different theme days. That way it doesn't seem like, oh man, we're not freaking start. You know what I'm saying? And I'll leave you with this. I left you with a thank you card. All right. So here's what I want you to do. I want you all to write a thank you card today. Old fashioned handwritten thank you card. All right. And don't just Leave it one sentence. The longer, the better. The more relational, the what? The better. All right. I went to HEB and I bought that thank you card. It took me about 3 minutes to walk in, grab those thank you cards. You know how much 50 of them cost? $11.97. One deal is what? $15,000. Okay. We should be grateful for the referrals. We should be grateful for the relationships. Okay. I'll leave you with this. I challenge you all to take this form and do it for 90 days. Just do it for 90 days. Okay. Do it the best that you can. You're going to go through roadblocks. It's not easy. I told you, people these days don't want to do hard work. This is the hard work of the real estate business. Okay. Right. This is getting your hands dirty, but this will change your business. You give it 90 days, you do it. Hey, it's not going to work out well the first week, but then you tweak your calendar. It gets a little bit better. It gets a little bit better. Right. And do your best and just get a little bit better each day. All right. If you do it for 90 days, I promise you'll have a great summer.
Jason, can
All
I
right.
say something? For the new agents, I'm new. We have all the time question where to start, what to do. I think this one is easy way to explain. Just do this.
Shoot, if I'm a new realtor, I always play this game with my wife. I was like, maybe we should just move somewhere across the country and see if we can start all over again. Right? I don't want to.
It'll work.
It will work. I wouldn't want to really at this stage, but it would work. Right? But your first step, every single person that you know, like, and trust needs to know what you do. If you're brand new, then you know what you do and you need to ask them for help. Right? So
back to what you said, always have a mentor or a coach. They're gonna be the guy.
correct.
Always.
Correct. I want you guys to give it for Robbie.
Yeah.
All right. Robbie was pretty influential putting this class together, and I think your card might be nice to go to him. I don't know, but Robbie, thank you so much. Appreciate you, letting us come here, all right?
Thanks,
And
Jason.
by the way, don't you feel like you know Jason a lot more face to face? Yeah, and I challenge you that when you come out to our meetings, we bring up the greatness tracker. When you know the faces, how's your greatness tracker?
Yes.
All right.
All right.
Thank you.
Out of curiosity,
You're not gonna need a.
You would be an event. No, that's a great question. You'd be an event.
Turn the TV on.
You'd be an event. Okay. I got to speak to all of you. I probably talked to direct. We spoke one-on-one. The people, and he was asking me directly about mortgages and stuff like that. So I would probably count 2 or 3 face-to-faces, but one event. Does that make sense? Cool. My website's jasonheim.com. It's really easy. My office is about 100 yards that way. I would love to get to know each and one of you. So if I can help you out any way that I can, please let me know. All right. And I'll be happy to help. I would like to, Robbie, I would like to teach a class on the whole mortgage process where they meet the mortgage underwriters and meet everybody in the process. So if you guys are interested in that, let me know. All right. So have an awesome day.
Thank you.
Congrats.
Thank you.
Yes, sir.